Now, so do you remember the first time you ever heard my grandfather?
It was a long time ago.
Yeah.
I mean, we're talking
30 years now,
yeah,
almost?
Yeah. But he impressed me right away.
Yeah.
He had the radio show. It was in the morning. I think it was a little tiny radio station out of Pomona.
Mm-hmm. You used to ride your bike, right? And listen on
Yes,
transistor radio?
Yep. I'd ride my bike down the coast and listen to Jerry talk. And he was smart.
Mm-hmm.
You know, the thing that impressed me was his intelligence.
And he was very charismatic as well.
He was.
Yeah.
But he was also very direct and brutally honest. Let's put it that way.
To a fault almost,
Yeah.
right?
Yeah. But I really enjoyed it. And I was retiring. I was lucky enough to retire early.
Mm-hmm.
Okay. And I thought I was done, but I got bored within a month or two.
Yep.
And so I was listening to the show and said, I work for insurance companies out in New York City and manage money for the company. So I kind of knew how to do it, right?
Mm-hmm. But my grandpa always did a little bit better, right?
That's right.
Yeah.
So what I did is I gave him half my money and I kept half the money back for myself and I'd manage it. And for like years, he would beat me every time in performance. Mm-hmm. And that really irritated me.
And you want to know why? How?
Yeah, exactly.
Yeah.
So when I was retired, I called him up. I said, Jerry, I've been your client for a number of years now. I'd like to come down and see you.
Mm-hmm.
And at that time, he worked out of his house.
Yeah.
He had a radio show out of his house. So
we've come a long way. We've been in business for 30 years. But
yeah, exactly.
Like you said, in the 90s, it was out of his house.
Exactly.
Yeah.
So I went down there, sat with him for a while, and I told him I wanted to work for him for free if he'd just teach me what he knew.
Mm-hmm.
Man, Jerry didn't say yes. I love Jerry. Anyway, he said, well, he gave me some series of, he gave me a machine and he told me to go home and do some research for him. And he said, I want you to look for this, this, and this, and all these companies. I want these criteria, find the companies that meet these criteria. Make a long story short, several weeks later, I came in to see him with hat in hand and said, Jerry, I couldn't find any of them that matched all your criteria. I had some that would match, but they couldn't match everything. And he says, well, it's impossible. You couldn't find anything. They don't exist. He just wanted to see how much work I go through to try to come up with it. And I brought all these graphs and sheets and stuff. And so then he let me work for him for free.
You want to know how serious you were.
Exactly.
Yeah. He worked at the big brokerage firms, right?
Yes.
For at that time for, 40 years.
Yes.
And, he moved to being an RIA, get rid of the commission model, right?
Yes.
Not having to deal with conflicts of interest.
He didn't like the conflict of interest.
Yeah. And we still see that today, right?
Yeah.
It still exists. It's less and less, but it definitely exists still.
Yeah. So I started working for him for several months and then he started paying me. And then, his partner was Lyle Pavlis, Klein, Pavlis, and Peasley. Yep. It was Klein Pavlis at the time.
Yeah, and Lyle used to do the show with him.
Yes,
InvestTalk.
Lyle Pavlis, right. And he would do the seminars with him too. Mm-hmm. Poor Lyle was kind of boring, but that's okay.
It's okay.
He was smart.
Yeah.
So then I started working with him, and then poor Lyle, he died of a heart attack or some kind of something.
Sudden illness,
over the weekend, and he was fine on Friday. So that's how I became a partner. I bought his widow's interest in Klein Pavlis, and we changed the name to Klein Pavlis Peasley. Mm-hmm. And that's how we got started. And that was in 1999, I think.
Yeah. And so the parallel investing part, was that also part of the firm? Was that a mantra back then as well? At that time,
Jerry was super, super focused on fundamentals of a company. Mm-hmm. Fundamentals. Mm-hmm. Technicals, reading a chart, he liked that too, but that was secondary by far. It's always the fundamentals. Is the company growing? Is it making money? What's the profit margin? Are the margins expanding or shrinking? That was his focus.
Yeah, and that's what he taught me as well, right? The value investing kind of mantra and approach.
You were in high school and you were working part-time, coming in.
Yeah.
And so
you have been doing this for 25 years?
Yeah. So that's how I got started with Jerry. That's how I got involved with it. And I loved it right away. It was a lot better than working for an insurance company. Their investments is primary, treasuries and, big blue chip companies that pay dividends. And that's
not very exciting.
No.
Not very exciting.
And you bought them and you held on to them. And it was just a matter of putting more money into these things and not.
Remember when my grandpa told you about Qualcomm?
Oh, yeah. That really, I hate to say it, but that really ticked me off too, because he could find these companies that were just starting, and the Qualcomm was just starting in the 90s.
Yeah.
People don't realize it, and that CDMA and TDMA technology they had was, avant-garde. It was, it was impressive.
Yeah.
And Jerry, even though they didn't make money and they didn't have the fundamentals, he still took a shot at it. He said, I think this is the future. That's what I mean. Jerry was very smart.
Yeah.
Even in his, he was in his 70s. Very smart guy.
Still working. And, he really taught me a lot about the three pillars that I think we use today to understand how to build portfolios and strategies. And that is, like you said, the value side, the fundamentals, the technicals, the charting, but also the macro, understanding what's happening in the broader economy, et cetera.
In the economy.
Yep.
You just can't, it's not a vacuum.
Yep.
Stocks don't move up and down in a vacuum.
Yep.
They have a background.
Yep.
And like today, the background is much higher interest. I mean, for 30 years, interest rates went down.
It's a very different environment today.
Yeah. Last year, all of a sudden, turn around, start going up.
Yeah.
Now you got to really understand what you're doing.
Yeah.
It's a changed environment.
Yeah. And I think my grandfather was ahead of his time with the radio show and the podcast, right? We started podcasting in 2008.
Oh, yeah.
When podcasting is a fad today. People, it's very popular. It's growing. But at the end of the day, most people are a flash in the pan, and it takes consistency. It's hard to do this.
I remember talking to you about podcasting, and I remember saying, hardly anybody podcasts. What's going to be our audience? How are we going to get clients, and how are we going to get our message out? And how are we going to do the same thing on the radio when hardly anybody is listening on podcasts? And you convinced me back then it's going to be the future. And
we're already doing the show, right? So it's easy you're doing the radio show, you package that up, and
didn't cost much. Yeah. Why not do it?
Exactly. So we've been podcasting now for 15 years.
And we have 1 million downloads a month now about.
Yeah. So, we've definitely grown. It's been an interesting few decades that we've been in business now. And, I think what's the evolution really is about access to our clients, right? Our clients can obviously listen to the podcast. We have the newsletter. Even today now, they have access to our calendars if they want to schedule a call with us. I think that's definitely a sea change from, decades ago when, you had a broker, you call them up, maybe you talk to them, you get passed off to the next broker. It's a very different environment today, which luckily technology certainly has helped with that.
I know. I just remember the first stock I bought was General Motors when I was 21. And I had $500 to invest, and it cost me $250 in commissions.
Yeah.
And now
there's zero.
It's zero now. That's how different it is.
Yeah.
So it's a whole new environment. And with the interest rates changing and the macro background so different, I think a lot of people are not understanding that change is going to mean a change in your outlook on what stocks will work and what won't, or what will work better. And I think it's moved way to the value side, away from the growth, even though growth still works. I'm not saying it doesn't. I'm just saying you're now seeing value will probably shine for the next few years, pretty good. So, well, thank you for tuning in. I hope you like the content we provide, and you can subscribe to further content at InvestTalk.